Hello and welcome back to my YouTube channel. So before you continue watching this video, please subscribe to my channel, like the video, share so that we can reach many people. And again, put your comments on the comment section. Yeah, you comment on the impact of the video on your studies. So we'll continue with the revision for the April 2025 mock paper. So today I'll do question 21 and I'll read the question. Giko Limited acquired 80% of the ordinary shares of shillings 10 par value in Seco Limited on 1st February 2024 at a cost of shillings 3612 million. Giko Limited had acquired 4.5 million shares at a cost of shillings 488 million in Biko Limited on 1st November 2022 when Biko Limited revenue reserves stood at shillings 50 million. The financial statements of the three companies for the year ended 31st October 2024 are provided below. Then add additional information. Number one, on date of acquisition, the fair value of identifiable net assets of Seco Limited approximated their carrying amount except for an item of plant whose fair value was in excess of its carrying value by shillings 150 million. Yeah, so that 150 million is what we call the fair value uplift, or you can also call it the revaluation reserve. Yeah, but I prefer always calling it the fair value uplift. Yeah, so the fair value uplift for 150 million. So this item of plant had a remaining economic useful life of 5 years. Number two, on 30th September 2024, Seco Limited sold goods worth shillings 100 million to Giko Limited. Yeah, so there was an intergroup sales of 100 million, whereby Seco Limited sold goods to Giko Limited, reporting a gross profit margin of 20% on this sale. Yeah, so there's a gross profit margin. So we'll be able to look at the UPI, the unrealized profit on inventory. Yeah. So Giko Limited had neither received nor recorded those goods in its books of account as of 31st October 2024. So this was the inventory. Yeah, the goods in transit. Yeah. So that's the inventory. So that will be able to affect the strain of financial position. Yeah, where it will affect the accounts for both Giko and Seco. Yeah, provided Seco will come to realize that Seco is a subsidiary. Number three, the group policy is to measure the non-controlling interest as their proportionate share of net assets in the subsidiary at the date of acquisition. Yeah, so whenever you see that the policy is to measure the non-controlling interest, then we are going to use what we call, we are going to use this information to calculate goodwill, and we are going to use the full method. Yeah, the full method of goodwill. Yeah. Number four, the intercompany outstanding balances between Giko and Seco Limited did not agree due to goods in transit as per note 2. Yeah, those inventory on transit which were not recorded. So as of 31st October 2024, the trade receivables of Seco Limited included shilling 60 million due from Giko Limited. Yeah, so there was an intergroup debts and balances of 60 million. And amount due from Biko Limited to Giko Limited stood at shillings 20 million. Yeah. Then five, any goodwill on acquisition of the subsidiary or associate is considered impaired by 20%. Yeah. So required, consolidated statement of profit or loss for the year ended 31st October 2024. B, consolidated statement of financial position as 31st October 2024. So we are going to look at what to consolidate. Yeah. So Giko Limited acquired 80% of Seco Limited. So that automatically qualifies Seco Limited as a subsidiary. So Seco Limited is a subsidiary. Seco Limited, it is a subsidiary. So it was acquired on 1st February 2024 and the year ends on 31st October 2024. So it means that it was not a full year subsidiary. So Seco Limited only existed from 1st February 2024 to 31st October 2024. So from 1st February 2024 to 31st October, that's 9 months. So it qualifies as a 9 months subsidiary. Yeah, so we'll take this when we are consolidating the we'll apportion when we are consolidating the statement of profit or loss. Yeah, so it was a 9 month subsidiary. So what about Biko Limited? Yeah, Biko Limited, we are not given the percentage ownership so that we can decide whether it's a subsidiary or an associate or a joint venture. So how do we get to know this? So you look at the number of shares. We are told that they acquired 4.5 million shares on 1st November 2022. So we are in 2024, and this financial year begins on 1st November 2023. So it means that it was acquired before the beginning of this financial year. So Biko Limited, we want to know whether it's a subsidiary or an associate or a joint venture. So how do you look at the number of shares? So Giko Limited acquired 4.5 million shares, and these shares were at 10% par value. They were at 10 shillings, sorry, 10 shillings per value. So you come to ordinary share capital, you get the value, the total amount to be 1,200 million. So the 4.5 million shares will be worth 450 million. Yeah, that will be worth 450 million. I said that's calculation you can do. You could, because you just take that to multiply by 10 and you get 450 million as the value of the shares of the 4.5 million shares when one share goes for 10 shillings. So it means that the 4.5 million will be worth 450 will be worth the will go for 450 million. So you just take US equals to 450. You divide by the total value of the shares in Biko Limited, which is 1,200, this value here. Yeah, so that you know the percent, the control that Giko add on Biko. So the control is 0.375. So you'll change that into percentage and you see what percentage is that. So you can see it's giving me 37.5%. So it's below 50. So this automatically is an associate, and it's an associate for the whole year. It's an associate for the whole year. Yeah, so now we know that what we can only consolidate is Seco Limited. Biko is an associate. So straight away, you go to the statement, go and answer the question. So it's Giko is the parent. So it's Giko Group, consolidated statement of profit or loss for the year ended for the year ended 31st October 2024. Yeah, so I'll create the bottom border. Bottom border. So the shillings were in millions, if I'm not wrong. The shillings were millions. Okay, so you go to the statement, of profit or loss, which we are given here. So I'll start with the revenue, just the way it's arranged. Yeah, you don't come up with your new things. So you just copy revenue. Then, we only consolidate parent and subsidiary. And this subsidiary that didn't exist for the whole year. So you'll apportion for the 9 months. So you'll take this revenue. And sorry, because there's something we'll deduct. So I'll say equals to bracket. So I'll pick this 36. And I'll add plus 1,500, but times, this 1,500 is times 9/12. Yeah, because the subsidiary only existed for 9 months. Then you subtract the intergroup sales. Yeah, you subtract when you look at the format that I shared with you, you subtract the intergroup sales. So the intergroup sales here was how much? I saw it somewhere here. And additional information number 2, we are told that on 30th September 2024, Seco Limited sold goods worth shillings 100 million to Giko Limited. So these are an upstream sale from subsidiary to parent. So it's an intergroup sale. So we'll deduct that 100 million. So I'll just say subtract 100. Yeah, then you enter. So when you enter, you'll get 46.25 as the revenue. Yeah, and that's how you do the consolidation. Yeah, you subtract the intergroup sales because it's not supposed to be part of the revenue. Then you go to cost of sales. So cost of sales will do the same. You just copy. Then you come here. Say equals to. I'll introduce bracket again. You pick this. Yeah, they're negative. So let me let me see what I will be able to do. Yes, I'll have that plus this, but this was for only 9 months, times 9 over 12. So allow me, let me change this into positive, these values into positive. Yeah, so that I'll be able to deduct it easily. I won't struggle when I'm subtracting, because there's something adjustments which I'll have to do here. I'll confuse. So let me just change this to positive. So I'll say equals to bracket, then positive, plus, then negative, that one, times 9 over 12 bracket. So we are going to subtract also the intergroup cells. The intergroup cells, which was 100. Yeah. Then we are also going to there was depreciation. There was depreciation under charge. Yeah, there was depreciation under charge. So I'm going to calculate that. So allow me to delete this. I do the calculation first. Yeah, because those are the adjustments that we have to do. Yeah, so depreciation, we are told that there was this item, there was this fair value uplift. Yeah, so it was an uplift for 150 million. So I'll do the depreciation here for that uplift. Yeah, so the depreciation, it had a useful economic life at the date of acquisition. The remaining useful life was 5 years. So if it was 150 million, so you say equals to 150 million, you divide by 5 years, but this subsidiary only existed for 9 over 12. Yeah, 9 months. So it's 9 over 12. Yeah, so you'll get uh, a depreciation of 22.5%. So this is what we call the depreciation under charge. Yeah, you have all those notes. This is the depreciation under charge. The other item that we'll adjust here under cost of sales is what we call the UPI, the unrealized profit on inventory. So how do you calculate the UPI? The unsold, unrealized profit on. So we are told that on 30th September, Seco Limited sold goods worth 100 million to Kiko Limited, reporting a gross profit margin of 20%. So you take the margin, because it's a margin, you just say equals to 20% times 100. Yeah, the 100 million, which was the cost of those goods. So the UPI will be 20 million. So this you adjust, you add them back on the cost of sales, the depreciation and the UPI. If there was UPFA, which is the unrealized profit on fixed assets, you will also add it back. Yeah. And when you have UPFA, you will also have what we call the excess depreciation. Yeah, so the excess depreciation you subtract. Yeah, you don't add it back on the cost of sales. Yeah, so in this case, I'll do adjustments with these two. So just come here and say equals to, yeah, I'll say bracket, then I'll change this to positive, so that when my adjustments can be okay. So I'll add that plus that, but that was for 9 months. Yeah, for subsidiary 9 over 12 bracket. Then I'll subtract the intergroup sales, which was 100. Then I'll add the depreciation under charge, which is that. Then I'll also add the UPI. Yeah, I'll also add that UPI and I'll enter. Yeah, so we'll have 117.92.5. We'll have 1792.5. So the my gross profit will be what is the gross profit? Yeah, so my gross profit will be the difference between these two. So I'll just say equals to this minus this. Yeah, I'll just subtract that way. Yeah, so my gross profit will be 2832.5. And I'll introduce a top border to separate that. Yeah, we continue with the consolidation. Yeah, so what next is investment income. Yeah, so investment income. Here, this is what you do. So we'll say equals to just consolidate the same way. Yeah, so here was 150, but Seco Limited had 0. But remember that under investment income, there were dividends. Yeah, there was dividends. So these dividends are intergroup dividends, yeah? So we'll subtract, you see, how much was the dividends? The dividends was 120 for Seco Limited, yeah. So the dividend paid, we'll subtract the 80% because we have a control of 80%. Yeah, we have a control of 80%. So from the investment income, you subtract that dividend income because it's intergroup. Yeah, so you subtract minus 80% times 120. That 120, I should change it to positive. So I'll introduce a negative sign. Yeah, you see this dividend which was paid. Yeah. Yeah, so once you have subtract that, I'll close the bracket. And that's the investment income. Then I'll also subtract the investment income that is coming from where? We also have an associate. So that associate we control. How much do we control? We control 37.5%. It's up here. Yeah, we control 37.5. Yeah, so you take that 37.5. Then you subtract 37.5%. Sorry, you multiply by what was the dividend under the associate. It was how much? Sorry. No, sorry, for associate, we look at the profit after tax, yeah? You see this profit after tax, yeah? So we'll only take 37.5 times 180 because the profit after tax is the earnings that comes to you as a parent. So we'll multiply that 37, the portion, with 180. Yeah, because that's an income, yeah? That's an income. Because you see, we don't consolidate associates, yeah? Associates, we just have the share of the profit, yeah? So based on all the total investment income, you'll take the parent, you subtract the subsidiary, which is 80% of the dividend paid, because you're not supposed to get, that's an intergroup dividend. Then you also subtract the share of associate profit. Yeah, that's what I've done here. Then you enter. So once you enter, it's giving me percentages. Let me see where we go wrong. So this was times this. So allow me, let me do away with this. Let me subtract that associate first. Let me see. Yeah, so you say equals to bracket. The investment income was only this, yeah, because equal does not have any. Yeah, so from that is what I said, you subtract the 80%, yeah. So let me just create another bracket, 80% of the dividend, yeah, because we are not supposed to eat into this dividend, because those are intergroup dividends. And I'll change this into positive, yeah, because I'm subtracting 80% of 120. Then I'll close the bracket. Then again, I'll subtract bracket the 37.5% control share of associate profit, and the profit after tax is what we share, yeah? Yeah, so my profit after tax will be 180, that positive value, and I'll close the bracket. So I'll introduce another bracket here and we see whether, yeah, at the end. And let me see if I can add another one here so that we have the brace bracket, yeah, that way. Then enter. Yeah, so once you enter, they just say yes. Yeah, it's still giving me this. Let me see. Same number. Number is not supposed to be that number to be 13.5. Oh, let me see. Let me work this out. Huh? Let me work this out because I'm having a challenge with the brackets. So let me just work out this. Let me first work out the 80%. Yeah. The 80% of 120. Let me get the values. It's 96. Yeah. Then let me have 37.5%. Then I can subtract from the same value, yeah, of the share of the associate profit, which is 180. Yeah, so this plus this, I'll sum all that. Yeah, so this is what I'm supposed to, 163.5 is what I'm supposed to subtract from how much? From 150. Does it make sense? This makes sense. No, it doesn't make sense that way. Mm. Yeah. So I'll take this 150. Yeah, I'll just say equals. So let me just do it the normal way because Excel is supposed to be capable of giving the correct answer. So the investment was 150. Then I'll put a bracket first. Sorry. The investment income was 150. Yeah, then you subtract. Yeah, because that's an internal. That's internal. So we'll have 80%. 80% of 120. Yeah, the reason why I've said is because this was dividends that was supposed to be. Yeah, that was an intergroup dividends. So I'll put a bracket and also put a bracket on that. Yeah, let me work with that first. Then I'll do the share of associates. So when you do that, it will give me 54. That makes sense. Then we have the share. Yeah, let me just say share instead of combining them. Share of associate profit. Yeah. So the share, or to look the share of the associate. So the share of the associate will be equals to 37.5%, because that's the portion that the parent control times the profit after tax of the associate, which is 180 in this case. And you enter. You enter. Yeah, so that's makes sense. So that's makes sense. So we'll have that in that order. Uh, then we'll go to the next item. Yeah, I think that's way now it's okay. Yeah, so because this one already have subtracted that, but our sale of associate should be form part of our gross profit. Yeah, but for investment income, I've deducted that. Yeah. So we go to the other item, which is the administrative. That one. Yeah, so administrative expenses, we do the same. Yeah, and always the impairment loss always appears. Yeah, so because I'm yet to calculate the goodwill, so I won't combine it. So let me just combine these two. So I'll have administrative expenses, this one, plus this other item. But that one I'll multiply by 9/12 because it was only for 9 months. Yeah, so we'll get that value there. Then we continue. We go to the other item, which is distribution cost. We consolidate again. So we consolidate distribution. We'll have that plus this, but this one is only for 9/12 for 9 months. Get that to 90. Then we'll have impairment loss. I'll just write here impairment loss. And this is how you are supposed to do these questions, even in your BDA. I'll show you why you are supposed to. Yeah, because these questions mostly, what is always important when you get such a question, don't avoid this question. Yeah, this question, you'll get every entry, you get a mark. So it's very easy for you to pass when you do such question because the one entry you do correctly, you get your full marks. Yeah. So I'll do my workings later. So I'll leave that impairment loss there because I can only get that impairment loss after working on the goodwill, which I'll calculate later. So as a student, I'm supposed to teach you now to answer questions and move because nobody will mark goodwill. Yeah. But entries, yeah, you start by getting your entries as you leave those spaces. Yeah. Yeah. What you can get, immediately you go with it. Yeah, that's how you pass your exams. Huh? Yeah. So impairment loss, I'll come and do it again. So we'll have the what is next after that? What do we have? We have profit before. Yeah, before we have finance cost. Yeah. So I'll have profit before interest and tax. Yeah. So let me get the profit before interest and tax. Sorry. Yeah, so profit before interest and tax. Yeah, so that's what we'll have here. So I'll create a top border. Yeah, and we cannot have it now because we are yet to have the, let me see if I can have it. Let me sum all this up to here because this is 0. So that when I come and calculate the impairment loss, then we'll have the profit before interest and tax. Yeah, instead of coming back, it will make my work easier. So I'll just sum them there. You'll get 1916.5. Yeah, 1916.5 as the profit before interest and tax. Yeah. Let me see. Let me see something. Just a minute. Uh-huh. Yeah, sorry. Let me undo that. Yeah, so we'll have that. Yeah, so we continue. So the next thing will now be the finance cost. The finance cost. Finance cost will be equals to, yeah, you consolidate. You consolidate. So you'll take that plus this, but times 9/12. Mhm. Then after that, now we'll have, what will we have? Uh, we now have profit before tax. Huh? Yeah. So what will be our profit before tax? What will be our profit before tax? Or profit before tax or profit before tax will be equals to this, yeah, the sum of these two. Yeah. So I'll just sum them so that when the only thing missing is impairment loss, once we calculate it and we put it there, these values change automatically. Yeah. So you don't worry about that. So I'll create the top border there. Profit before tax is 1791.5. Yeah, so that's the profit before tax. Then now what is our tax? Yeah, what is now the income tax? I think that's what is remaining. Yeah, the income tax expense. Yeah, so I'll also consolidate that. Say equals to this one plus 150. But this 150 is times 9/12. Times 9/12 of the income tax, so it's 42. Yeah, therefore our profit after tax will be how much? So our profit after tax, profit after tax, profit after tax will be how much? Yeah, so you just sum these two to get the profit after tax. Yeah, and did you see up to that point? That's what the question needed. So you can see profit after tax is that a value. So I'll create a top border there and create a bottom border. And you see, I'll create a bottom double border there. So my profit after tax is this value. Yeah, but remember, it can't be, sorry, it can't be this value because I'm asked to calculate the impairment loss, which we have to include here. Yeah, we have to include this and we subtract it. Yeah, so it will change this automatically. Yeah, so you see, in such a question, for any, maybe one entry is times two. Yeah. So you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. In fact, there are 11. Yeah. Yeah. So for any 10 entries, I'll give you the 10 marks. That's how they mark this. That's how they mark questions under financial reporting and taxation, because it's all about entry. It's all about entry. Yeah. It's all about entry. It's all about entry. Yeah. So you don't struggle. Yeah. You don't struggle maybe to balance or do what. Yeah. What you have to get is you have to get the format correctly. Yeah. So therefore, I'll now have to calculate the goodwill so that I can finish this question. Yeah. Yeah. So goodwill. Yeah. The goodwill that we'll have to impair. We are told that they were impaired at 20%, yeah, for both for subsidiary and associate. So I'll start by calculating the goodwill of, because what I'm consolidating is the subsidiary. So I'll only calculate the goodwill for the subsidiary. Yeah, I want to calculate the goodwill for the associate. Huh? Yeah, so goodwill, it's a full method. So we'll have what we call the purchase consideration. So what is the purchase consideration? So purchase consideration, we are told S was acquired at 3612 million. So that's the purchase consideration, 3612. Then the fair value of NCI. So fair value of NCI, you add the fair value of NCI there. So I don't have that, so I'll calculate it, and I can only get it from the net assets. Yeah, the net assets, because we are told that the group policy is to measure the non-controlling interest at the proportional share of net assets in the subsidiary at the date of acquisition. So I'll look at the net assets at acquisition. Yeah. So what is the value of the net assets? So these net assets are, the first one will be, it depends with the question. So my net assets, the first one will be equals to, I'll go to the question and look at the statement of financial position. So ordinary share capital with the first item. Then from there, to save on time, let me drag that. I can just drag these three, retained, yeah, and it'll give me up to retained profit. So in this question, the other item that was a net asset was the fair value uplift of 150 million. So we have a fair value uplift, of, yeah, we will also include that. Then there was dividend paid. So there was a pre-acquisition dividends, yeah. That will also form part of the, yeah, will form part of the net assets, yeah, because this pre-acquisition dividends will also have it, yeah. Yeah. Okay, so let me see these values. So where do we get these values for the net assets? Yeah, so the net assets, yeah, you can see this is a lot of work, huh? Yeah, and you see, it will take more time calculating, huh? Struggling to get the values of, to get the goodwill correctly, so that you get the impairment loss, and you waste so much time, yeah, on doing these things, analyzing this analysis, when you can just know that you have to consolidate parent and subsidiary, and you get your marks. Yeah, you get even full mark. Like in this question, yeah, if I'm giving a mark for every entry, because that's what I do, and we already have 11 entries correctly, then you'll score the total marks. Yeah, even without getting the impairment loss. Yeah, so as a student, don't struggle so much calculating. Yeah, just know the format and leave the spaces. Yeah, yeah. So ordinary share capital for the subsidiary, it was how much? It's 2,000. Yeah, so I'll drag also for share premium. Yeah, but for return profit, it's always the return profit at acquisition. You know what you're given here is at the end of the year. Yeah, so Seco Limited was acquired on 1st February. 1st February. Yeah, you have to analyze that question now. 2024. And the year ended on 31st October 2024. And it means that this financial year began on 1st November 2023. Yeah, once you know that, then you can now be able to get the pre-acquisition retained earning. So what is the retained earning at 31st October? The total. Yeah, the total is how much? Yeah, so the total retained earning from first. Yeah, from we assume from from the day that Seco Limited has been in existence. Yeah, so the total will be this is what is given on the statement of what is given on the statement of profit or loss Yeah, the retained profit was 1950. Yeah, so what is the pre-acquisition? So the pre-acquisition, this is total, yeah? Yeah, from the day, we don't even know we don't even know when the Seco Limited was incorporated, yeah? Yeah, but the Geek only acquired it on 1st February. So 1st February, yeah, so you move from here going back, that's what we call at the pre-acquisition profit, because that's what you have to place as the retained earning. So if this is the total, yeah, so what is the post-acquisition? So what you do, you calculate the post-acquisition retained profit, then, yeah, the post-acquisition, which is 9 months. So you just come here and say equals to 9 over 12 of, what was the retained profit for the year? The retained profit for the year for Seco Limited, you see this, retained profit for the year was 120. Yeah, so take 9 over 12 of 120. So it means that from 1st February 2024 to 31st October 2024, the retained profit was 90. Yeah, 90. But remember, from from the day this or let me say from the beginning of the year to the last year, because return profit is being brought down, from the beginning of this financial year to the end, the total was 1950. But for 9 months, the total is only 90. So you see, you can get now the pre-acquisition. Yeah. So you just say the return profit at acquisition was 1950 minus the 90. Yeah, and it is 1860. So that's 1860 is the retained profit. So you just come here and say equals to 1860. Yeah, because we are looking at the net assets. The fair value uplift, it was 150. We are given. What is the pre-acquisition dividend? So the pre-acquisition dividends, how do you calculate it? You go to the dividends, under under the statement of statement of profit or loss, yeah. Dividends paid was 120 by Seco Limited, yeah. But the pre, yeah, just as the retained profit, we use the pre's, yeah. So the pre-acquisition dividends, before the year begin, we are Seco Limited existed 3 months before it was acquired by Gico, yeah. So you take those 3 months, 3 over 12 times the 120, which was the dividend, which was paid. Yeah, so you will get 30. Yeah, so these are the net assets acquired. So you sum all this and you auto sum, you'll get 4440. Yeah, so this is the net assets. Yeah, so the fair value of NCI will be 20% of the total net assets. Yeah, because we are told that it's proportionate. So it will be 20% of the total value, which is 4440. Yeah, so you'll get 888 as the fair value of NCI. Yeah, that will be the fair value of NCI. Yeah, then you less the net assets. Yeah, you less the net assets. So net assets, we have it here. So it is this. Yeah, so you less this. I'll just put a negative. Yeah, therefore my goodwill will be, I'll sum all this to get the goodwill. So this goodwill is unpaired. Yeah, the 60, which is goodwill, is impaired. But we are told that this goodwill were impaired at 20%. Yeah, so I'll take 20%. Impairment loss now will be, impairment loss will be 20% of 60. of 60. Yeah. 20%. Let me just select it. 20% of 60. So impairment loss is 12. Yeah. So when we subtract it, and that one we subtract. Yeah. So the goodwill, the net goodwill or unimpaired goodwill, in this case will now be 60 minus 12. Yeah. So I'll just sum them because that other one is already negative. Yeah. So the goodwill was 48. So the impairment loss is 12. So you just come here and subtract that 12 because it's already negative. Just put it there. Yeah. And you can see when I adjusted it, you can see it's giving what? It's giving a value of 1367. Yeah. So once you are done with that, now you do what we call profit attributable to NCI. So you find the profit attributable to NCI. Yeah, you will do the profit attributable to NCI and the parent. Yeah. Yeah. So let me see. Let me see. Yeah, so let me see this. There was a share of associate profit, investment. These values look to me strange, but let me see. And administrative expenses. So this was supposed to be part of this, yeah? But even if you include it here, you'll get another mark, huh? Yeah, because you have calculated it correctly. Yeah, so no one will penalize you. Yeah, so uh, uh, so there's an adjustment. Let me see. This share of associate profit, yeah, this one you add back, the 67.5. That's okay. But hmm, yeah, sorry. Yeah, I think yeah, at the investment income, we are also supposed to subtract. Uh, yeah, that's what I forgot. Yeah, you subtract because that one you add, you subtract bracket 37.5% of. Yeah, so there was also dividend paid. Yeah, there was also dividend paid by the associate. Yeah, this 100. Yeah, yeah. So you subtract also this. Yeah, because we only have 37. So we are that's an intergroup dividends. That's what I forgot. Yeah. So I'll put a negative so that when I select this, I can be able to put a bracket. So I can put a brace bracket. Then there also I put a brace bracket. I think that's the correct adjustment. Yeah. 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 So I can just say yes. Yeah. And the value that it will give me. Yeah. Yeah. So, yeah. So the investment income, that's now correct. Yeah. Yeah. Because we also have the intergroup dividend. So we'll have a profit after tax of 1329.5. Yeah. So that's how you're supposed to do that question. So you go to an extent because this consolidation, you look at what is attributable to NCI and what is attributable to parent. Yeah, so attributable. Attributable. Let me do it here. Attributable to NCI. Yeah, so what is going to non-controlling interest? So we look at the profit after tax. Yeah, so the profit after tax. So profit after tax for the subsidiary. So you lose the values for the subsidiary. Profit after tax for that subsidiary will be equals to, you go to the statement of profit or loss. So profit after tax, we use these values here, yeah? Yeah, so you can see it's 240. Yeah, but remember, it only existed for 9 months. Yeah, then CI existed only for 9 months. So you take 9 over 12 of 240. Yeah, simple as such. 9 over 12 times 240. You get 180. Yeah, then you check. There was UPI. Yeah, and that UPI will subtract it because it was an upstream. It was an upstream. sell from subsidiary to parent. Yeah, so it was how much? It was 20. It was 20. See up here. Yeah, the UPI. You have to deduct it because that's an unrealized profit. So it can't be part of our profit. So I'll put a negative sign. After UPI, what do we have next? We have what we call there was a depreciation under charge. Yeah, so the depreciation under charge, you also deduct that. Depreciation under charge. Under charge, yeah, because that was an item of subsidiary. So you will also subtract it. We calculated it up here. It's 22.5. Yeah, yeah. Then now what is the adjusted profit? Yeah, so you look at what is adjusted, what is here. So I'll sum all this. Mm. Sorry, we had an impairment, yeah? Yeah, there was impairment loss of 12 impairment. There was an impairment loss. We had an impairment loss of 12. So you also subtract that impairment loss of 12. You add just, yeah, it was 12. Let me just pick it here. Yeah, so from there now, why is it positive? Yeah, because I will introduce a negative sign. Yeah, because we are just supposed to subtract it. So we sum all that and we'll get that 125.5. Yeah. Yeah. So therefore, the NCI profit will be, yeah, NCI is, remember, it's only 20%. So the NCI profit, yeah, the profit attributable to NCI will be 20% of 125.5. Yeah, because that's the only profit, which is 25.1. Yeah, so the NCI profit is 25.1. Therefore, the parent will remain with, so it's easy once you get that. So the parent will have how much? We'll have 139. We'll have that minus 25.1 here. So the parent will go with 1304.4 million. Yeah. Yeah. So that's how you're supposed to do part one of that question. Yeah. And I've said in these questions, you score your marks up here. Yeah. Ensure that you get as many entries as possible. Yeah. Yeah, you may have challenges calculating UPI, calculating, doing these adjustments, but know what to consolidate. Yeah, that's the key thing. Yeah, you are not supposed to balance or get. So I'll go to part B. We have taken so much time there. So I'll go to part B, consolidated statement of financial position as at 31st October 2024. Yeah, so I'll prepare that here. I will prepare that here. Sorry, we continue. Yeah, so we'll have Giko Group. Giko Group. A consolidated statement of financial position. Consolidated statement of financial position as at 31st October 2024. Yes, I'll create the bottom border. And as I said, here also you have to just know what to consolidate. Yeah. Yeah. Don't be so worried about balancing. Yeah. Don't ignore this question because you have a problem maybe calculating goodwill or investment in the associate or retained profit. Yeah. Don't get as many entries as possible. And that's why it's always easy to pass financial reporting. Yeah. Because of entries, you get the entries correctly, you pass the paper. So don't be afraid. So we'll start with the non-current assets. Mm, We'll start with the non-current assets. Yeah, so it's always PPE. The first one is PPE. I've seen it there. So just copy. Yeah, so here you don't apportion the consolidation. Yeah, you just consolidate fully. Yeah, you consolidate fully. Yeah, you consolidate fully. So you just say equals to, yeah, uh, consolidate parent and subsidiary. So I'll take 5,000 plus 4,200 bracket. Then there was fair value uplift. That's revaluation. So I'll add the 150, which was a revaluation. Then was there any depreciations? Yeah, there was a depreciation undercharge. So depreciation undercharge, you always subtract. Yeah, so it was 22.5. Yeah, we calculated it. Yeah, that's the only adjustment. Yeah, there was no UPFA. If there was UPFA, then we could have adjusted. Yeah, when you enter, so I'll get that value there. Yeah, then the next item is, let me see the guidelines. The next item, now we have investment. So that investment, I'll start by replacing it with goodwill. Yeah, so goodwill. There's a goodwill. So the goodwill, the net, yeah, the one after impairment was 48. That's what you placed there. Then that there was that investment. So there was investment in associate. Yeah, we'll calculate that. So in this case, associate is BCO. So I'll say investment in BCO. BCO. We'll calculate that. So you leave it. Then we'll check whether there were other investments. Yeah. So you say investments. You can say investment or other investments. Nobody will penalize you. Other investments. Yeah. Yeah. So these are the investment. How do you calculate? You just come here and say equals to. You look at the investment, which was because you consolidate. Yeah, we have this 4,500 plus 450. Yeah, you consolidate fully. Yeah, then you subtract what was used to acquire the subsidiary. Yeah. Yeah, what was invested on subsidiary. So we have 3612. So you subtract that 3612. 3612. Then you also subtract what was acquired, used to acquire the associate. Yeah. Yeah, because those were the investments. So associate was acquired at 48 million. So you'll also subtract that 48 million. Simple as such. Yeah. So the other investment, the remaining investment is 850. So these are not internal investment. Yeah, because the investment on associate on SICO and BICO was, yeah. So we continue. So after other investments, I think there are only two items under PPE, investment and that one. Yeah. Investment and PPE. Yeah. So I think at that point we are done with that. So my total assets, sorry. I'll go to current. Sorry. I'm in area. So current assets. So we'll come to calculate that. Don't worry. Yeah, I'm teaching you on how to pass this paper easily, so that you don't struggle. So current assets, we have inventory. Yeah, and there's adjustments that we do under inventory. And you have the notes. I gave you the notes under inventory. So inventory, we will consolidate the normal way. So we'll say bracket. We have 1,200 plus 900. Then you close the bracket. Then there was what we call, there was intergroup. There were goods on transit. Yeah. Let me see. Yeah, the 100 million, yeah, they were received but not recorded. Yeah, so we'll add them back, the inventory, as part of the inventory. So you add the 100. Yeah, because there were goods on transit. Yeah, so you add them because they have not been recorded. Yeah, when this financial statement was provided. Yeah, then from inventory, you subtract the UPI. Yeah, you always deduct the UPI. UPI reduce the inventory, the unrealized profit on inventory. This one, huh? So you subtract it. Yeah, I think that's the only adjustment to do under inventory. And then you go to the next item. What is the next item under current? Trade receivables. So you also consolidate. You say equals to bracket 900. Sorry. I was supposed to start with equals to bracket 900 for trade receivables. It's 900 plus 900 bracket. Yeah, but there were intergroup balances. So you subtract intergroup balances from trade receivables and trade payables. Yeah, so what is the intergroup balance? We are told that the intergroup balance, yeah, the intercompany outstanding balances between GICO and SICO Limited did not agree due to goods in transit. So as of 31st October, the trade receivables of SICO Limited included 60 million due from GICO. Yeah, amount due from BICO Limited to GICO Limited stood at 20 million. So we are not even concerned about this 20 million because that's an associate. We are not consolidating it. Yeah, so the only adjustment we'll do is this 60 million. So you subtract that 60 million. Can you enter that? Then we have the next item is which item? Yeah, you just follow the statements, cash and cash equivalents. Yeah, there was no cash in transit. Yeah, so we just consolidate only those two for parent and subsidiary. Cash and cash equivalent, we'll have 400 plus 300. 400 plus 300 give us, yes, 700, yeah? Yeah, 700. So therefore the total assets will be may I just copy that. So my total assets, I'll sum everything from property, plant, and equipment all the way. Yeah, so that when I'll have got the value for investment in BICO, the total assets will just change automatically. So I'll sum this. Yeah, so we have 14. Yeah, that value. Yeah, that's okay. So I'll create the top border, yeah, and close it at with the bottom double border. Yeah, so we continue. So we go to equity and liabilities. So equity and liabilities. So we start with the ordinary share capital. So ordinary share, in this case, you just pick for the parent only. Yeah. For ordinary share capital and share premium, you pick only for the parent. So at that point, I'll just drag up to retained profit. Yeah, because they follow each other. So for ordinary, take for the parent. Yeah. So you'll have that. And up to share premium. Yeah, I'll leave the return profit because that's what I have to calculate. And also have the NCI equity. Yeah, I'll have the NCI equity. Yeah. This one I have to do the calculations. Yeah. So therefore we'll have what you call the total shareholders funds here. Or yeah, shareholders funds or shareholders equity. Let me just say equity. Yeah, shareholders equity. Now will be the total from ordinary share capital all the way to NCI equity. So let me just add so that when I get the values, you help you save some time. Yeah, it helps you save some time. So let me just sum all this. Yeah, so at that point it will give me. So that when we add that, automatically the values will change. So you create the top border. So I'll go to the next items. That's the non-current liabilities. Non-current. Yeah, so you just copy this non-current liabilities and There you can just drag so that you don't go back copying. Yeah, so start with the 10% loan stock. So just consolidate the two. Yeah, there's no adjustment to those items. So you'll have 800 plus 1,000. Yeah. So I can just drag for deferred tax, and those are the two. Yeah, it will just add the two values there. Yeah, it helps you save on time. Yeah, then the next item will be current liabilities. Yeah, and yeah, also just drag. Yeah, yeah. So I'll start with trade payables. I'll put a bracket because I know that there were the intergroup debts and balances. So trade payables will have this one plus this. Then you add the 100, yeah, the one which was not recorded, the goods on transit. Then you subtract the intergroup balance, which was 60. Yeah, which was 60. Yeah, that adjustment, enter. Then we go to the next one, the accruals. And accruals, there's no adjustment, so just add 40 plus 30. Plus 30, you get 70. Then tax, now I think tax, there's also no adjustment. So I just drag, yeah, and I'll get to 20 for tax, yeah. So therefore, what will be my total equity and liability? Total equities and liabilities. So total equity and liabilities will be equals to, yeah, so total equity and liabilities will be equals to this shareholders equity. So you start summing from here, eh? Yeah, so from here, so I'll sum all this total and get here. So you sum that, huh? Yeah, so you have 11,940 as the total equity and liability. So top border, then let me close with the bottom border. Yeah, so you know that total assets must balance the total equity and liability. So I have to calculate. So I'll start with the investment in BICO. That will be my first calculation. Yeah, the investment in BICO Limited. Yeah. So investment in BICO. Yeah, so the investment in BICO, you will start with the initial investment, yeah? The initial cost of the investment. So the initial cost was how much? Was 488. Yeah, already that information was given on the question, so I don't want to go back because of the interest of time. So you add post-acquisition profit. So you will add post-acquisition profit and you less any impairment loss if it's there. Yeah, so 37.5%. Yeah, we know that, that we only control 37.5%. So what was the post-acquisition profit? Yeah, so this BICO was acquired long time ago in 2022, yeah? And BICO. Yeah, it has a retained profit of 300, yeah? Yeah, so we want to add the post-acquisition. So before acquisition, how much was the profit before it was acquired? Yeah, so the profit for the year, so we'll have add post acquisition, yeah. So let me say that post acquisition, but you have to know that it is added, post acquisition profit. Yeah, you add it to the initial cost. So the post acquisition profit. So what was the profit? The profit was 300. So I'll say bracket. So equals to bracket. What is the retained profit? Retained profit is here under the statement of financial position. So the retained profit for BICO was 300, yeah? So that's 300 will subtract from, you see here, you see, they say that in Biko Limited on 1st November 20, when Biko Limited revenue reserve was 50 million. So it means that when it was acquired at that date, the revenue reserve, which is the retained profit, was 50 million. Yeah, so you subtract that 50 million. 50 million. But remember, Giko only, the parent only controlled 37.5%. Yeah. Yeah, so you multiply that by 37.5%. So you get 93.75. Then you less impairment. Yeah, so there was no impairment loss in this. Yeah, so you look at the amount. So you just add this. Yeah. So you always less the impairment loss. Yeah, so you sum those two. Yeah, so this is the investment in Biko. So investment in Biko just come and replace. You see how this works easier. Instead of spending so much time thinking, yeah, you just do the entries, then you come back, yeah, then you come back and calculate. Yeah, yeah, you will get your marks. You'll get your marks here. In fact, you can even get the full marks here without even calculating these other items. So yeah, so when you're doing this paper, do it the way I've revised this paper. Yeah, don't be stressed about goodwill or any other item. Yeah, now you see when I've invested in Wiko is this, now this has changed to 15,427.3. So total assets is that. So it will have to balance with this. Yeah, so I'll go now and calculate the retained profit. Yeah, the retained profit. Yeah, so I'll use the equity method, the retained profit. Yeah, so we always start with what? We always start with the retained profit for the parent. Yeah. Yeah, so for the balance brought down. So retained profit. Retained profit. Balance, yeah. So I think let me use the shortest way where we have the balance brought down. So I'll use the balance brought down. So I'll say equals to bracket. So we'll have what was the balance for the retained profit under G. It was 2,500. So what was the pre-acquisition? So I'll subtract what was the return profit? What is the return profit? Yeah, for the year. So you subtract for the year. Yeah, which was 670. And remember, yeah, you subtract for the year. There you don't apportion, yeah, because it's for the parent, yeah. Yeah, so you'll have 1830. Then what was the, yeah, let me say return profit for Giko. Yeah, so that, yeah, when you are revising, you'll be able to follow. And then we have for SICO, return profit again, retained profit. And so SICO, because it's a balance brought down, it was acquired during the year. Yeah, it was acquired during the year. So it doesn't have the balance brought down. Yeah, so it is 0 for SICO. Let me say S. Then for BICO will be how much? So BICO is B, retained profit brought down. Retained, sorry, retained profit brought down for BICO. So I'll say B for BICO. Yes, BICO. This I said S, SICO. Supposed to be SICO. Okay, so what is the return profit? So just say, do the same. You say equals to, you go to the statement of profit or loss. Sorry. The statement of financial position. Return profit was 300. And you subtract the profit, return profit for the year for BICO, which is 80. Then you multiply by, you close the bracket and the portion. Our portion is only The portion of the parent is only 37.5%. 37.5%. Get that value there. No, sorry. Now I was supposed to factor in, yeah, even the 50 million. Yeah, because you see this was acquired previously. So if it's a balance brought down, then I'll also have to subtract the 50 million. Yeah, so that I get that value. Yeah, 63.75. Yeah, because those are the balances brought down. Yeah, those are the balances brought down. Yeah, so you'll have to less, huh? Yeah, you will have to do the adjustment. You do the adjustment. Yeah, so we'll add back the profit attributable. You add back the profit attributable. Profit attributable. Yeah, we continue. Yeah, we continue. Continue. Yeah, so we'll add back the profit attributable per parent, which was 1302. Then you also less the dividend paid by parent. Yeah, dividend to parent. Yeah, you less that. So how much was paid to parent? Dividend paid by the parent, it was 600. So yeah, it's already negative. So let me delete that so that I select it. Yeah, so you'll get this. Yeah, you'll get all this. And you sum. Huh? Yeah, that's how you're supposed to. So you'll have that value as, that's the value for the retained profit. So just come here and put the retained profit. I'm worried. It's like I was recording without showing the screen or what's happening. Yeah, that's what's worrying me. And the NCI equity, now I can be able to calculate the NCI equity because that's now the last item that I'll have to adjust. Yeah, NCI equity. So I'll do it here, the NCI equity. Yeah, this NCI equity, you'll start with the ordinary share capital. So you take the ordinary share capital, the share premium, the retained profit, then there was also the revaluation reserve, the fair value uplift. Yeah. So I'll start with the ordinary share. Let me just copy them here so that I can work quickly because I've taken so much on this question. Ordinary share capital. Yeah, so I'll drag, copy those items. Share capital. So here I'll include fair value uplift. Yeah, because that originated from the subsidiary. Fair value uplift, sorry. Fair value uplift. Let me just put all the adjustments. Then we'll have the UPI. The UPI as an adjustment. Then we have depreciation under charge. Yeah, those are the adjustments that we'll have. Then yeah, I think the depreciation under charge. We'll deduct these two. Yeah, from all that. Yeah, so to save on time, the ordinary share capital, we know that NCI takes 20%. So you just say 20% times. What was the ordinary share capital? What was the ordinary share capital of, it was 2,000, this one, of the subsidiary. Yeah, so you take it that way and you enter. The same to share premium. Also, you take 20% of the share premium of the subsidiary. So the share premium of the subsidiary was 400. Then retained profit, you also take 20% of the retained profit. So retained profit was how much? At the end of the year now, it was 1950 if I'm not wrong. Yeah, retained profit here was 1950, that one. Yeah, so it will give you that 390. Then the fair value uplift, we take 20% of 150. Of 150 to get 30. So in my UPI, you also take 20% of UPI was 20. So you take 20% of 20. But this one you deduct because they reduce the NCI equity. Those are the intergroups. Yeah, so the 20%, you cannot add it back. Yeah, so the depreciation under charge, you also take 20%. Also take 20% of 22.5%. Yeah, and this also, sorry, 20% of 22.5, sorry. Yeah, and this also we'll have to deduct. Yeah, that's how you do the NCI equity. Yeah, using the equity method. Yeah, you just choose the values. Yeah, now you can sum all this. And you say auto sum. You get 891.5. Yeah, as the NCI equity. So let us see, because that was the only one lacking. Yeah, so let us put it here if we see if it will balance. So once I enter that, it will give me 15,427. So what was the total assets? Yeah, 15,427.3. Yeah, so I think they've just reduced. Even if I reduce this, yeah, so it has balanced. Yeah, it has balanced at 15,427.3. So that's how you're supposed to do that question. That's how you're supposed to do that question. So I'll end the class. And if you are watching this video for the first time, please share, like, and subscribe to my channel.